So the Wall Street Journal, they put out a new story, which is extremely crazy and very, very mind-boggling what they're telling people. So the news story talks about that regional banks face years of trouble, and it says that they will be forced to straighten their balance sheet and trying to keep depositors and regulators happy for a long time to come. We know and we understand, I've talked about this in my several videos, that we know that the regional banks, they have a problem. Now, one of the reasons that regional banks are in trouble, we know because of their toxic assets and hundreds of billions of dollars of unrealized losses. But if you really think about it, if you really understand what is going on about the economy, is that this is done by design, because they obviously, the big banks, the 5 big banks or 4 big banks, they have this idea and they've been working on it for years and years, because they wanted to destroy the regional banks. They wanted to make sure that there is going to be only 4 banks and that's it, so they can control everybody and everything in the entire world. Now, I did talk about this crazy situation that Wells Fargo and Union banks, they were dumping their commercial real estate buildings and assets, but this is really bad. This is gone from bad to worse in a matter of couple of weeks, and this is happening because banks, they try to survive. So in other words, in a real world, when you have a business, and if your business is not surviving, you start cutting. You're cutting employees, you're cutting expenses, and in the end, if you're a big corporation, you start selling your assets and your shares to see if you can survive. Now, one of the things that we have to understand is that we do know that the regional banks, they hold 80% of all these CRE loans and construction loans and commercial loans and what have you. But now this is really bad. I thought that they are going to be able to figure out somewhere to sell their assets at the discount price to be able to survive, but this is changing rapidly. There is a new study that it just came out. It says that now regional banks scramble to unload their commercial real estate loans, fearing new crisis. Now, you need to pay attention to this because this is very important. You see, when the banks, they have all these loans, obviously they loan money because they make interest on it, and that's how they pay their shareholders and everybody else. But if you have a loan that this loan is non-performing loan, the only salvation you have is 2 things. One of the things is that what you do is you foreclose these non-performing notes, and then you try to sell it in an open market, which unfortunately, if you do that, now nobody wants all these office buildings and commercial buildings. So what do? You have to end up selling it in a massive discount. And the other thing is that if you have loans that they are not to that degree which they are bad. Let's say you have a loan that they are making payments, but they're not able to pay fully payment. They make a payment 1 month, they skip the next month, they pay late. It's sort of a non-performing, but still it's not that bad. Now the banks are selling those notes. So imagine this. If you are a bank and if you have a loan You have $100 million loan, right? And they're supposed to make payments. Now they're making a payment 1 month, the next month they don't make a payment, then they want extension. So they're paying it, but there is a difficulty, but still they're paying it. So what do you do as a bank? Now you're going to investors and big hedge funds, say, listen, I've got a note worth $100 billion, or let's say $1 million for sake of argument. You have $1 million note, you want to sell it. Guess what's going to happen? What's going to happen is, who's going to be able to buy these loans, okay, these non-performing notes are big companies, BlackRock, Blackstone, major hedge funds. So what they're going to do is they are going to buy this note at 50% loan to value. So what they're going to do is they're going to say, okay, if you have a note that this note is sort of a non-performing, they're going to buy the note at 50%. And then what they're going to do is they're going to go, and they know for sure that they have money already. There's a spread in it. So what they can do is either they can go ahead and resell it to somebody else to make money, or they're going to foreclose the property. Why? Because they know they have a great deal. Now, again, remember, when I say 50%, I am being completely conservative, because if you have a non-performing note in this environment, when we're in recession and everything is crashing like there is no tomorrow, you have to be lucky as a bank that a hedge fund or a major player come and pay you 50% on your non-performing note. So this is opening doors to big players to come and gobble up all these non-performing notes, literally pennies to a dollar, and then they're going to have a massive upside. The banks, they're selling their notes. Imagine this. They're selling their notes just to survive. Now, mind you, I'm talking about non-performing. My guess is that because of all this problem that the banks they have, I won't be surprised they are selling their performing notes at a discount price. Why? Because if you have a non-performing note, you have to have a massive discount to a buyer, so they're willing to pay you for that. I think because of what's happening with the banks, that they're getting destroyed literally, they are selling their performing notes at a discount. And what's happening is that a big company like BlackRock or Blackstone, or so many of them, they can come and say, okay, so you've got $1 million note, they're performing, they're paying every month, okay, I'm paying you 70 cents to a dollar, 60 cents to a dollar. Why? Because now they're saying, if we buy these notes at 60, 70%, to a dollar, so 60 cents to a dollar, 70 cents to a dollar, you've got 30 to 40% of gap, which is a cushion. And what you're going to do is you're going to say, okay, I'm going to make the money, which is great. I'm going to make a lot of money. And in the future, if they don't pay, if I do turn around and forecloses this property, I bought it cheap, so I'm not going to lose that kind of a money. So this is crazy. That's what's happening. And banks, they are reaching out to their notes. First, most likely they're going to sell their performing notes, and then of course they're going to dump all the non-performing notes just to be able to survive. So where this takes us is this. I've been telling you guys that we are in recession. So many people out there, brokers, agents, in some of the investors, they argue, they have basically make comments that we are not in recession. Even some economists, they come in the, in the media, they're saying that, we're not in recession, we're not going to have a recession, especially if the Fed paused for a minute They're already saying that we're not going to have a recession, everything is fine and dandy. Well, here's what's going on. I've been telling you guys that we are in recession, and we're going to have an extreme hard landing. We're going to have a very bad recession in the next 6 to 12 months, and things going to change. Now, there is a report from Market Insider. It says that Dr. Doom, Nouriel Roubini, says that the U.S. is bound for recession thanks to high interest rate, sticky inflation, and credit crunch. Now, he talks about the fact that we are going to have a recession. My argument is that we are in recession. We are not seeing the effects of the recession because there is a lag effect. But if you are looking to all the indicators of what is happening right now with bankruptcies, you look at massive layoffs, closures, Westfield comes, says, I want to get out of the, mall business. They start closing their malls. Hilton in San Francisco, they abandoned, they're not making payments. You've got hotels, they're walking away. They're not making payments. Commercial real estate, office buildings, they are in chaos. It's a bloodbath over there. We are in recession. Some of you guys, they don't want to believe it. We're in recession, but because you haven't seen the full effect of it, a lot of people, they said we are going to have a recession. And one of the most fascinating things is that Fortune magazine, they just came out with an article today. And it says that Deutsche Bank top minds put U.S. recession chance near 100%, and they said avoiding hard landing would be historically unprecedented. So I've been telling you guys we're going to have a hard landing, we're going to have a crash landing, we are in recession, things are going to get worse. Now, more and more banks and more companies and economists, they come and say, ain't gonna happen. We are in recession and we're gonna have a very hard landing. One of the things I want to tell you guys is this. We are going to see a massive changes in our economy in the next 6 to 12 months. I want you guys to be prepared. I want you guys to understand what is about to happen. Some of you guys, you look at only residential real estate and you say, no, there is no recession. We're not going to have a drop. Some of you guys have an argument that, we don't see a recession because you don't see the full effect. But we are in recession. It's going to be a crazy situation the next 6 to 12 months. I want you guys to be prepared. I'm not here to scare you. I'm not here. This is not fear mongering. I'm sharing information with you guys. Be prepared. As a matter of fact, I want to tell some of you guys out there, you have deals. That is your own deals. If you have deals that you wanted to sell, if you have deals that you cannot make payments, you have a problem, sell it at discount. Get out. Because I guarantee you, if you guys are being stubborn about this situation, you will lose your shirt. I want you guys to have a great week. Be careful. Be careful. I'm telling you, this is very important. Be careful is about what is about to happen. And I want you guys to be good, having a great week and good luck out there.